Okay, guys, so let's get started. It's going to be. Hi, Damien. How are you today? Good. So I'm going to break down the GBP yen and try to understand the trading plan that we should devise on this. It's going to be a short video because this video on YouTube. Try to understand the trading plan first and try to understand how you're using your buy zones and sell zones. And just remember, it's the analysis that we are doing right now. Based on our analysis, we execute. Execution means entries and exits, which are based off M15, M20, M5, or M1. It purely depends the choice of management that what we need. Let's get on with this. A monthly chart is right in front of you. As you can see, the price came down and the price reversed. Price went up, and then the price started to go down again. Huge rejection. So you've got a huge rejection there. So let's see where the price is heading next. $144.75 and $143.54. Now, I've selected this specific area because of the median of the price action, because there's a lot of choppiness there. There's a lot of choppiness there. So let's try to understand the direction of the price. Price has a huge wick. Yes, it's a conflict if you're looking to sell, but there we are. Price is there. As you can see, price has been in the bearish market structure. In low high formations, low formations. The trading plan will be price remains below this level, which it has. You're expecting the price to go down. Do you understand this, right? So I'd say this is your weekly. Let's put it this way. I won't use the word monthly, but that's what your weekly sell zone is. And price above this, then you are back in a buy zone with the target levels to these possible target levels there. Makes sense? So price to go down, and for the purposes of levels, you can use them. Select the median again. So our trading plan is, if the price remains here, you're expecting this. So see, if I'm marking levels, they're very practical, but again, you'll follow the procedure of marking the levels exactly as I explained, the professional levels. I want you to stick to those markups, please. They're very professional. You understand this completely? Any question?
No questions.
Good. Is there a trend line? That's a trend line. Confronts a resistance, adds on. So whole this zone will be our sell zone. That's how we will define this. Let's move on. Weekly. Again, I'm trying to show you the analysis. It is there's no execution in it. How to take entries, managing and exit the trades and all that. Of course, we're just discussing entries now. It gives you more detail. What you saw, it's sort of zoomed in. Price making a lower high formation, a lower low formation, a low high formation, lower low formation, as you can see. So let's mark the market structure. So that's the high. That's a low formation, which breaks the market structure as well. As you can see, there's a break of market structure. Debatable, yes, there is. Price forms a low-high formation. Your first selling opportunity, a low-low formation. Retraces, lower high formation, a low-low formation. Retraces, a low-high formation, 100% retracement, and price came in. So right now you are in the last move was from price forming from a low-low formation towards a lower-high formation. And if the price forms this, as long below this level, the trade with the trend will be to the downside. You understand?
Yes.
Any movement to the upside is a counter trend trade, and you need to be absolutely clear on this. A trade with the trend and my counter trend trade. Remember, there's a difference. There's a different mental approach and psychological approach when trading these two sort of trades, of course, and as the rules that I've set down for you. So let's focus on this. Now, here we are. Let's break it down further. This is my sell zone. Again, that is my sell zone. Yes, it's 250, 300 pips. We'll break it down further. If we are taking a sell trade, it's more likely to be trade with the trend, overall trend. If it's a buy trade, it's a retracement trade. And remember, anything on the daily is zoom in off weekly, so nothing's going to change. So let's break it down further. Price went up, rejected from this daily level, 1, 2, 3 days. Yesterday, the price went up and again rejected at 143.78 and price came back. So now let's focus on this. Before this, if you like to see any Fibonacci levels and try to understand where the market is, price is nearly rejecting as 61.8 Fibonacci, which is an important Fibonacci level. It's an important Fibonacci level and a golden ratio that one can expect the price to reject from there, and the price rolls over. Again, if you've been trading this, you would have a nice trading selling opportunity there for nearly a move to 350 pips, roughly. So use your Fibonacci's as well. Let's move forward. You understand it so far, right? Any question?
No question.
Make sure you really use your critical analysis, a thought process on it when it comes to analysis, because remember, once you completed your analysis, all you have to do is to break it down to H4 and H1 to precise your trading plan before you go on to execution on M30, M15, and M5 time frames. Let's move forward. Daily time frame here. So we know exactly where we are on the monthly and weekly, and now this is where we are on the daily. And as you can see, price came back, lower low formation, a lower high formation, another lower low formation. One would expect the price to go a lower high formation. Is it going down? Well, let's try and establish that. I'm going to take out the Fibonacci's. So that's your monthly, and I'll use the monthly as the red moons. So that's your daily level of bearish price action variation. So if the price remains below this level, then you're expecting the price to go down. Makes sense? You understand, right?
Yes.
Please focus with me on this. A daily sell zone. All you're looking for is a selling opportunity there with the rules that I've set out in terms of breaking down the candlesticks formations from daily chart onto H4 or H1, breaking it down further on M15, M30. I'm not going into detail because I'm uploading this lecture. The point is, that's where you're looking for sell. You're looking for sell there, which could be a good trading opportunity. If the price goes above, it's not a sell zone anymore. Make sense? Yes?
Yes, makes sense.
Daily buy zone. Just remember, I did mention a buy trade is a trade with against the major move is going to be the sell move, right? So the buy trades are counter trend trades, as we can see from the weekly. So just any buy trade can be a short-lived in its nature and can reverse on you. So you have to be careful. You have to be proactive when it comes to execution. But again, if you are taking trades there, let's say if the price is there and the target levels are there, these are your target levels. These are your first target levels. This is 57 pips. Hence, I'm not interested, but ultimate target levels could be 130 pips or a double top formation up to 181. Makes sense? You understand, right?
Yes.
So where we are moving average cross, I would say wait for the daily candle close and see how it closes, and that will give you an indication as to if it's shooting star formation, we're more likely to see if the price rolls over to the downside. So you understand so far the analysis, yes? Any question?
No question.
Okay, let's break it down further. The whole point is breaking down your price action beginning from monthly, weekly, daily, H4, H1, M50, stroke 30, 50, 30, 15, M5. That's how it is. Utilizing all the time frames together aligns them in one direction before you take advantage of that push. Let's move on to H4. Here we are. Now, H4, engulfing candlestick, price rolling over. So price rejected. That's now. And please understand how I'm aligning everything together. Yeah. That's your H4 sell zone. So if the price comes back, that's what we are expecting the price to go down, right?
Yes.
The price went up. Price comes back. Yes, it's back in the sell zone. It's a good trading opportunity. If you get a trading opportunity around these areas, your risk and reward will be pretty good. Do you understand? Make sense, right? And remember, okay, makes sense. Do you understand this, right?
Yes.
So it's an H4. Any questions? So if the price comes back, it will give you another 60 pips opportunity. The first opportunity, keep you on this. So yes, trading opportunity, stop loss is pretty small. The setup stop loss is pretty small. It can well be a trading setup. You understand this? And any question so far? Any question?
No question.
If the price holds here, but in my opinion, if the price holds here, for instance, right, you can look for buying opportunities. You're going to look for buying opportunities on this. That's where your target levels should be. Makes sense, brother? Yes.
Yes.
So that's how you break it down. Now remember, we established the zones here. We review the price action. Again, going back to the daily chart, it looks pretty good. Shooting star formation, price rejecting. Daily, I can read the price action is more likely to its continuation move to the downside. That's what I think. Huge rejection. You can't ignore these rejections. These pin bars, you can't ignore shooting star formations. So I'm pretty optimistic the price will reverse. Remember, that's not just enough. There's more to it. This was a breakdown of the price action in terms of its direction, but you also need to break down the reading of the intention of the price. That's what you have to break down, the intention of the price, which includes the candlesticks analysis and also market structure analysis and seeing where the price is at a low high formation, low low formation, high high and high low formation. So give that into it. But when you're doing this analysis, I would expect you to have a clarity of this nature. I want to see a clarity of this sort. You understand? Absolute clarity. That's what I wanted to see. If you're struggling at it, then forget execution. Execution is merely 10%. Anyone can use this trading plan and trade strategies to enter the market and exit and take advantage. You might have repeated entries within the trading plan, few losses and few wins. As long as your trading plan is right and it wins, you will win. That's also so. Remember, 80% is your planning the trade and breaking down the price action, of course. So, any question on this? And do you completely understand this analysis?
Yes, 100%.
So yesterday, if you've been trading yesterday, then what? Where we are? Strong bullish candlestick. Let's look. Let's have a look. Strong bullish candlestick. Trading this. If you're trading this yesterday, then that's your sell zone and that's your buy zone. Yesterday. So let's and of course we'll be conducting this in-depth analysis and training on paper trading and also stimulator. So yesterday you would know easily that you could start buying after this candle close. So you can be on an executional time frames M15, M30, M5 to take advantage of this move. Absolutely a clear move for almost 100 pips. Make sense, right? Understand?
Yeah.
Yes, understand, right? Make sure you keep updating your variations as I explained. So it's very interesting. Right now, where we are, because it's a sell zone, right? I'm not interested to buy there. I'll use this and let's see how this plays out. So right now, what you're waiting for is price. You can't start selling there. It's a daily sell zone begins. So you need to use your analysis to break down the price action further before you take it. Price the trading plan on H4, H1 before you take advantage. And also this is even better sell. So target will be these levels first. Any question?
No question.
Great. Hope you enjoyed the analysis. See if your analysis is exactly the same. Conduct an analysis on another pair. And of course, we'll have another session later. Thank you.
Thank you, Waqar.